Team, this is Ruben from TGE, and I want to show you how to know when the market environment is extremely volatile versus when it's extremely bullish. Okay, and I want to show you this risk measurement tool that we like to use. Is called Gamma Profile. Okay, and so Gamma Profile, actually, let's just take a look at the SPX instead. And so what this profile does, what this risk measurement tool does, is that it shows you if we are below this gamma flip point or this gamma, whether it's below zero or above zero, right? And this is going to have a significant meaning on how the market is going to behave while you are trading, because you need to know when is an appropriate time to swing trade, so you could use your swing trading strategy versus like when it's an appropriate time to become a day trader or even a scalp trader. And as of right now, this current market environment, it's the best for day traders and the best for scalp traders. And I'm going to tell you how you find that out. Okay, so with using Gextron, and this works best with ETFs, the index SPX. You can do this with any ticker as well too. Okay, you can get the gamma profile. Gextron will give you that gamma profile and it will give you that gamma flip point. Okay, and so what it does is that it shows you all these strike levels, and again the yellow line represents the spot price when the snapshot was taken, but it gives you all these strike levels. Okay, these are not strikes that you're going to find in the option chain. There may be, but these are just in general overall price levels for this given ticker. Okay, and what you have to understand here is that when Gextron shows you this gamma flip point, it's telling you something right here. And what this is telling you is like, hey, trader Ruben, when when the price of SPX goes above 57.90, we are going to be above gamma flip point, which is gamma zero. And what that means is that when we are above this price level, the market is going to be very, very bullish, extremely bullish. And we've seen it with time and time again. Just to give you an example of the chart, if we go to TradingView here, these moments where we were here around January, we were extremely bullish. We were above gamma flip point. And during these market environments, and actually you'll see this time and time again when even earlier in December, October, November, like you'll see it. When we are above, when price action is above this gamma flip point, that's when you can expect tight ranges, small drawbacks and longer more bullish upside. Okay, that's usually because market makers are going to be adding more liquidity to that given ticker. Okay, they're going to be buying more. So the saying is they're going to sell the rips and buy the dip. So that keeps a tight range, and that makes the price of a stock move slow. Okay, it's not as intense as when we start going to like these bearish market sentiments. Okay, and so during that time, that's the best time to swing trade. Okay, when Gextron is telling you, hey, SPX or SPY is above gamma flip point, then you know that you better start getting those like 60, 90 days expirations, and you could just hold and swing for as long as you possibly can, right, until you hit price targets based on the gamma exposure or whatever else you're using to create price targets. But this is how you know that hey, we're bullish, we're gonna swing trade to the upside. This is awesome, right? Okay, but now let's take it like let's do the opposite, right? What about this? When we're above gamma flip point, this is best for swing traders. It's not good for like day trading. It's really hard. Not that it's not possible, but it's not the best in my opinion. But now, what if we go below the zero gamma flip point? So let's say price action, like as it is right now, the spot price is 56.70, and we are way below 57.90, right? What this tells you as a trader is that Gextron is telling you, hey, we are in volatile moments. Swing trading is not going to be your best friend right now because there's going to be a lot of sharp reversals. There's going to be very intense buying and selling during intraday movements, which could overall destroy your delta. And then that would make maybe even theta decay your contract even faster. So just know that when we are in these below gamma flip point, expect a lot of volatility. Okay, very intense buying, very intense selling. And if you're a day trader, this is the best moment for you to be doing what you do, right? But if you're a swing trader, these are the times where you want to avoid that, okay? And so that's what the gamma profile chart shows you. If you have any questions, just leave a comment down below and I'll get back to you.